Welcome everyone to our panel name Inside the Investment's Mind. So I'm here with Francois, Srki and Heidi. Welcome everyone. Since you'll be much quicker and more efficient with this, I'm giving you 30 seconds max per person to introduce yourselves.
How quickly do you speak? Do you speak like this really quickly?
That's
for the 30
too quick.
seconds?
That's too quick.
So, hi everyone. My name is Francois. I have been 7 times a founder, co-founder. Had 1 IPO, 1 bankruptcy. I've been a VC fund out of Sweden, 28 investments, 4 IPOs we thought were cool, and I got completely bankrupted twice. Once the fund collapsed, the other one I took over a Danish company that had gone bankrupt, and I went bankrupt. So I've been on both sides, and I've seen the good, the bad, and the really ugly of building and exiting tech companies. Is that good?
My name is Srdjan. I'm a co-founder and the CEO of Orqa. Orqa is a hardware engineering company based in Osijek. We do drone technology. In my previous life, I worked in finance. I was a risk manager in an asset management company here in Croatia. I was a head of a sovereign wealth fund here in Croatia. And when it came to talking to VCs for the first time, I had a bit of advantage over maybe some other founders, but happy to talk about that.
Love the support from the front row. So hi everyone, I'm Heidi. Like Srdjan, I also have previous lives. So I used to work in the media company, then in digital agency, and now I'm in the world of AI as a co-founder of airt, which is a startup that is helping companies automate business workflows using AI agents, but in a multi-agent setup, because when you put them together, they can execute more complex tasks, and you can actually exert more control over what they actually do.
Thanks, everyone. So, Francois, we're going to start with you, since you were late. So let's start
French
with...
style, right?
Yeah. Let's start with understanding the investment philosophy. So you've been an angel investor for quite some time. What are the core principles that guide your investment decisions, and how do they differ from what most entrepreneurs might expect?
So as an angel investor, the criteria are going to be pretty much the same, at least from what I like to invest in. Massive market size. Nobody owns 100% of a market. Even Coca-Cola still today doesn't. So it has to have, your small market share needs to be big enough to have an exit that's meaningful. Therefore, supersized markets. Number 2, can the team take it all the way? It's very easy to follow the early stage founder sell, but then if the founder is the only capable salesperson, how are you going to grow from 1 to 5 to 10 to 25? And that's a classic European mistake. Amazing engineers, amazing MVP, first sell, second sell, and then it stops there. So criteria for me are massive market size, and then a team that actually has the variety, diversity, the skills. And that differs from the usual BS that you're going to read online to say, oh, it's all about the vision, the mission, and the first, and the product, and the technology, radically different.
So Heidi and Srki, you've been raising with your startups as well. What do you say to what Francois has just said? Do you agree, disagree, and why? Why is your experience?
Well, I would say it's a little bit typical European approach to even angel investing, because, as angels, they come in the earliest stages of the company. And yes, sales and growing from 1 to 5 and 5 to 10 is important, but that comes, there's a lot later. In the stages of startup development. So it's the same thing with all the other, I dare say again, VCs and investors in general when it comes to Europe. They're not that much risk prone. They're much more risk averse than compared to the US investors. And they are looking for many, many things in the early stages of startups than the US investors. Many more.
If I remember correctly, I think we heard that as well last year. Srki, what is your view on this?
So I can totally understand where this simple heuristic is coming from. I mean, the VCs need a way to quickly, sift and triage the deal flow, and like if you go, by this is like the default way to do it. But I do think that starting from us as an example, if our first investors would approach us using that, they would have missed us. And because we wouldn't have qualified for massive market criteria, because the market was not massive, and it is now, but then it wasn't. So it's as useful as a heuristic is, but I think if you really want to, as an investor, really want to be able to identify with more granularity, I think like betting on founders is something that provided that you have the right information, is much better predictor, which kind of helps you with these. I agree these are edge cases, but still. So I would partially agree, but disagree in a component. Yeah.
Francois, do you have any comments maybe before we move to?
Look, I can counteract my own thing easily. Yeah. So, if people, looking back 5 years in and looking back, it's so obvious. If people said, that, the Netflix story, the biggest media company would not own or have the titles. If you said, Uber, Netflix, all of the disruptors had no markets. So, back to your point, it's not because there's no market today that you're building something that will create the market. There are technologies that actually explode others. When the iPhone came out, suddenly everything exploded because you could use it with one tap. So that's number one. No market today doesn't mean that there's never going to be a market. Two, follow the founders. Yes, but the problem is we are all super optimistic. As founders, we believe in our own stuff. And the problem is that the markets don't react. So, if you listen to Paul Graham, or pretty much everybody saying, build something that people want, and there's a lot of truth in there, because it's not because you love it or you think everybody needs it that people actually want it and want to pay you for it. So it's this fine balance between, believing in something and following a founder on the crazy mission, and then following a complete optimist that has not read the market. Somewhere in between.
Okay, let's move to the second question, which I guess could be connected to what you just said. Everybody's talking about red flags. So, Francois, what are some common red flags that make you hesitant to invest in a startup, even if the idea seems promising?
So I'll try and adapt. There's so many red flags. How long do we have? And I'm sure there's even more red flags for entrepreneurs assessing investors. The classic red flags I've just explained already, saying great idea. There's tons of great businesses that make for a fantastic lifestyle as a founder, but you're not going to be good enough material for a VC. So don't kill yourself with it. E-commerce companies can go from 0 to 2.5 million relatively quickly with very little investment, and then stay there. And certainly you have a 5 million revenue business spewing $1 million net profit a year. Fantastic business for a founder. Terrible, flatline company doing 1 million profit a year. Not venture capital size. So I think I would say the red flags are founders who are very happy to build a small and average company. Great for them, not for the investors. And then number two, people who believe their own bullshit, but have nobody else either understand it or be able to repeat it. So if it stays in this microcosm of somebody's head, plenty of garage tinkerers figuring out a new way of doing things, which is amazing, except that nobody wants it. And I think that are my two big ones. After that, the team, the market size, and everything else.
Okay. Hajdi, I guess you have a lot of experience with investors. So what are the red flags for you regarding investors?
Yeah, I guess it could be a long list as well. At least from some perspective, is because we are a deep tech startup. So there's a lot of things happening in technology, and one of the red flags, what we see, is really talking to an investor who does not understand your area. Because, if you're talking to someone who's immediately expecting traction, customer, something, and you're developing technology and it takes a while to develop it, then, we don't really have many things to talk about. But I have to mentioned this red flag because it's, again, comes a little bit from our personal experience. Do your research on the VC, because there are a lot of VCs coming up and popping up that present themselves, of course, in the best light possible, and they can be also very eager to invest in you. But they could be shady. The money that they have could come from really shady sources. So, for example, if they operate through Cyprus, that is a little bit of a red flag because it's known for money laundering. So, yeah, be careful there.
Okay, I think that there's like two levels to it. One is on the angel level, which I think is more appropriate to red flag certain characteristics, and then on the VC level, when we're talking about the firm, I don't think that red flags are necessarily obvious, but you could do your research, talk to other founders that have had experience with them, and really try to understand how will the marriage that you're going into look like. Try to imagine that. But going back to the angel level, and I think most of startups in early stage will get approached by angels, and so for me the red flag would be if someone's asking for equity for advice, that's a massive red flag. You do not pay advice with equity, and that would be a major one. And on the VC level, again, if you, and it happened to us. We were when we were in a negotiating phase, working out the details. At some point we've seen that something that we've agreed on in the term sheet was codified in the investment agreement, but it looked like what we agreed. But if you would untangle the legalese, it was quite the opposite, literally the opposite. So, stuff like that really, kills the trust. And for me, now, this was our first VC experience. We crossed over that. We weren't it was a nuisance. It eventually killed the deal because it introduced massive deal fatigue, and we could make a deal on the next hurdle. But if I would do that next time, I wouldn't waste time on the next hurdle. This would have killed the deal right away. But yeah, with firms it's easy. You just ask around, get other founders' experience. So
do your due diligence, basically.
Do your due diligence.
Francois, did you want to say something as well?
Yeah, I can add, I've been on both sides of the table, and I think red flags are relatively easy. Keep in mind as the founder from the very first meeting with investor, is this person is trying to get something, or are they trying to have my back? When something goes wrong, is it the person I'm going to be able to go and talk to and get intelligent questions and supportive questions, or is it going to be someone who's going to panic and worry? And it's a very easy question to ask other CEOs they've invested in. So that's quite an easy first trick. Do they have the back of the founders, or are they just there for the glory days? As soon as there's a blip, is not there. Number two, and I think it's a very human thing, the initial red flag should be human. You know how you've got this gut feeling that we have, I'm not going to buy something from somebody I don't trust. And sometimes you have this super well presented, overly sleek presentations or person, and he's friendly and he's likable and he's intelligent, but you have this gut feeling screaming, I just don't trust you. Walk away. That's usually the thing that I follow. Same thing, you have this thing when he speaks, the tone of voice or the accent, something irritates me. You're not going to spend 10 years, 7 years if you're lucky, with someone who irritates you every time they open their mouth. So very simple stuff. Is it a relationship that can work? Is he or she listening? Is she asking intelligent questions or just questions to put me down? And then in case of trouble, do they have my back? These are, I think...
100%. And I think what I wanted originally to kind of follow up on what Hajdi said about, do they get it? And this is it really is relevant for what you just said, Francois. I do think that, the do they get it bit is more of a purple flag than the red flag. There's a fine balance between, is your shit, the shit, and they don't get it, or
is your shit not quite there yet? And they don't get it because it's very, like, you know, all over the place. Yeah. So there's a fine balance. But there are situations where you clearly see that they don't get it. And for me, I wouldn't say it's a red flag. Again, it's down to bandwidth. You know, if some, you know, VCs go over a massive amount of deals that they need to triage. So, you know, but if you have a feeling that, you know, you would have to draw it every time, you know, every single situation you have to draw it for them. Beggars can't be choosers if that's your only option. And typically in Croatia, you have 1, 2, 3 options. So, you know, roll with it. But if you do have a choice, like, just go for the ones that get it. And there are some that do get it on the first instance they will get it. And if I can, you know, flip that around in what's a massive green flag, if you're laying out, you know, some things are complex. There's no like simplifying certain things. And if they get it from the first time, that's a massive green flag.
Sorry, it's becoming a discussion. No, absolutely
That's
what
good,
you're
that's
saying.
good.
But the thing is, yeah, in Croatia we don't really have a lot of, like the number-wise, a lot of options to choose from. And yeah, at the beginning you cannot really be that picky, so you kind of take the money where you can, especially from the angels. But the moment like you really are going, like if you want to grow, go further, go much more abroad. Doesn't matter that you're in Croatia. Like at some point you can always move your headquarters to some other legislation. But there are so many actually VCs out there. And again, coming from the perspective of who gets you. I have to admit, we were in the States a few months back, and even there, we talked to several VCs. It was just the initial conversation, you know, getting to know each other. But out of those, I don't know, 5, 6 we talked to, 2, like they knew everything we were talking about. Like they immediately, like they were following the field, they were really knowledgeable about it. And it gives you a lot more, you know, confidence and calmness to, you know, when you talk to someone that you will not have to waste a lot of energy trying to explain what you're doing. And that's why I say, like, it's good to have someone who knows what you're doing.
Can I disagree on one point? It's not your main point, it's your side point. You said that in the beginning, like, you know, especially from the angels, take the money. Especially, I would be like completely the opposite. Like, be super careful when taking money from angels. If there's like, you know, to Francois' point, like a tiny fraction of a you know, iffy feeling, like just
So
walk
basically,
away.
do your due diligence, your research, try to find a good fit, and trust also your gut instinct.
Yeah, and you know, when you get to early stage money, if it's a horrible mistake, that can be company, you know, that can kill the company in extreme cases. So like it's much easier to make a mistake and on a angel level, and it's much harder to do due diligence for angels than it is. Maybe it's their first time. Maybe they don't get how this whole you know, venture thing works, and they think they know about your field. They, you know, and you know, you end up with someone that's like, you know, the relationship might go horribly wrong. So rather not take the money and think about how you're going to pay the wages next month, then.
Just to add on that, okay, maybe it is more difficult to do due diligence on the angels, but because we are having much better community of startups now in Croatia, you can talk to other startup founders who have taken investments from the angels to at least, you know, get a feeling of what to look out for. For example, if someone wants to give you, I don't know, 10K euros and demands 20% of your company, I mean, that's definitely not something that you want to accept. But you have to know about that, and you have to talk to other founders, and you'll be much more knowledgeable about what to expect.
Okay, moving on to the next question. I think, Francois, you have also partially answered it already. But how do investors provide value for startups beyond just financial support, and how can founders leverage this?
So at the Fundraising Bootcamp, we have a whole module about how to assess investors. One, you will have a very clear list of very simple ways through very simple questions or online research to remove all the scammers. And my God, as good investors receded in the last 2 years, the amount of scams and fake investors and M&A guys trying to switch the conversation into them fundraising for you and charging you the opportunities for them to say, oh, I'll do some equity and I'll get you the rest of the money and I want equity in this. There's a ton of scams that you have to filter out as part of your process. I think the easiest thing to do is to have simple, very direct conversations. It's remarkable how we chase the money as a founder and we don't look at the person who carries the money. It's absolutely fine to say, I'm not fundraising, I'm not raising capital. All of these are venture capital terms. You know, you're a founder, you have a company with 100,000 shares, I'm going to be selling 25,251 shares. And the sentence we use all the time is, at this stage, I'm trying to figure out what makes a great investor for us. I don't know, because you don't know, it's the truth. At this stage, we're trying to figure out what makes a great investor. Why would you be a great investor? What can you do for us beyond the cash? Is there anything? If you're a cash-only investor, it's absolutely fine. There's this view that if people only give you cash, it's a bad investor. No, I'll take cash as long as the conversation is honest. So ask questions, be curious, and let them express. What is it that you like? What is it that you need conviction because you're really not sure about one particular thing? If they don't have conviction at all, they're not going to continue the conversation. So I'm selling 2,500 shares. Who buys them is your choice, not the investor's choice. When you sell them is your choice. At what price, from and to whom is your choice. So you're going to have to flip this thing and start asking them why they should be and would be a great investor for you. But otherwise, to simplify things, we can use the American bullshit and say, they're going to do commercial introductions, bullshit. Oh, they're going to help you massively with the next round of funding, bullshit. They're going to be amazing at hiring people, bullshit. These are not operational people. Most investors have 10 to 25 per fund. They might have 2. Angel investors are spewing tens of investments. Some of them we speak with have got 58 to 80 investments. If you think they can help 80 companies, you're dreaming. So therefore, be very precise about what you want from them. And capital only is great, as long as it's declared. But otherwise, commercial introductions, hiring for big name funds, because the people who are prestigious in their industries love to work for a big name VC fund-backed company. These would be the 2.
One thing that you said triggered me. We were talking about red flags, but we completely forgot to talk about scams. Like, there are scams when it comes to...
We have some time, but just before we move to scams, what did Srdjan and Hajdi, what did you expect from your investors? Just the financial support or something else?
Well, you take what you get.
Okay.
But
honest?
We were lucky that we didn't know, right, at the beginning. We were lucky that we had an amazing group of angels as our first investors, people that have consistently delivered beyond cash, people that have, came to our offices and sat with us for weeks and then really working, putting in the real work without asking for remuneration, just to see business fix some things that they could contribute to. So introductions to partners, introductions to. So you can get a lot of value from angels.
Lucky bastard. That's
yeah,
nice.
We were lucky. I mean, there was a mixed bag. We didn't have bad ones. We had some neutral ones, and we had some really, really, really good ones. So that if you can get and now when you get to the VC stage, it's super important that your VC can open, like if they are on a certain tier, if they have access to a higher tier investor that they can open up for the next round, and because they will do that. So if they are sitting on a board together with some other VCs from a higher tier fund, like this is the type of value that you can expect from them. And really good ones will really just dig in and do the work.
I'll disagree, because we're all agreeing on this panel. It's getting boring. We have to disagree. Do not wait for your angels to help you or believe they're going to help you with the next round of funding. This is so rare. You are extremely lucky. You're in the 1 in a million.
It's a luxury, but it's
luck.
Yeah.
Most angels are going to claim that they have friends. Oh yeah, I know this one, that one, that one. And then when it comes to the time where you really need that introduction, do you know how they're going to pitch you? Because I'm pretty sure if you haven't trained them word by word, they're going to be slaughtering that pitch in front of the investor that you don't have many chances of. So you'd better make sure that you A, train them if they have the relationship, and two, kind of test the relationship, because if they haven't spoken in 6 months, or if they haven't done a deal together, what is this relationship? There's a lot of ego in the industry, and everybody knows that, oh, I know Andreessen Horowitz, I know Matrix, I know Bessemer. When it came to it, by the way, I know this from personal experience, where I had 2 of the Nordics' finest, biggest name VCs, and I got 1 name out of them, 1. After a year of me asking and them gloating that, oh yeah, we know Sequoia really well. So I think you have an amazing bunch of angels, but don't take that as a rule.
Our angels did not open up opportunities for next year investors. I'm talking about VCs, not angels. Angels opened up, like they did the work, they've opened up contacts in massive companies, which really helped us. So this type of introduction, like let's say industry-based, I do not have an experience of an angel opening up a VC. That did not happen.
Damn, we're agreed.
VC,
Oh no.
VC to VC, I think that can work, and that can, you know.
Heidi, do you want to disagree with them? Just
Unfortunately, nothing
No?
to disagree on.
well.
They said it all. This is, yeah.
Okay, so we have like 35 seconds before we start with the Q&A. What's one piece of advice you wish every founder knew before approaching potential investors? Francois, you go, then Srki, and then Heidi. Be very short, please.
I think the one piece of advice when you approach investors is don't believe your own bullshit. You know, are you relevant for them? So, you know, read the audience, understand, are they investing in your space, your stage, your geography? We convince ourselves that we are relevant to investors when we're not. And unless you have a long list, DocSend data, we're big on hard data, you're going to need 110 super perfectly well-matched investors. Stage, geography, no competition in the portfolio, and people who are quoting or explaining that they know your space. If you don't have those and you go out with the usual 25 investors, you're dead.
Okay, Srki, Heidi, be quick, please.
Warm introductions, good warm introductions can go. Like that's a if I'm to give a number one like a deal winner, that's a quality warm introduction. If you have someone that understands your business, that digs your business, and is respected as an expert in that field by an investor, by a VC, if that person makes an introduction and has a strong conviction, your VC does not have to have a strong conviction. That they don't need to be an expert in your business, but you know this sort of validation will transfer. So, you know, good, like if you have access to network people that can understand your field, and if you can get them on board, like that's an asset to cultivate as an introduction. Again, unicorn type relationship, but they are out there. They are out there.
Heidi?
And damn, now he stole my answer.
That's actually good.
I know.
If he did, yeah.
But just I wanted to say, you have more connections than you believe, I dare say, and we all have so many people connected on LinkedIn, everything. Try to chase those people if you believe they can give you warm introductions, because yeah, what Srki said, I think that's the most valuable thing when you're approaching an investor.
Okay, any questions from the public, audience? Come on. No one.
I think they know everything now.
Yeah, obviously. Well, you can maybe
They're so shy.
talk about scams for 1 minute then, if you want to. Both for startups and VCs, whatever.
Yeah, I can talk about VC scams or accelerator scams. Like, this is real. If somebody's reaching out to you cold on LinkedIn or an email, it's probably a scam. And just as VCs like warm introductions, startup founders should also cultivate warm introductions from VCs. If it's coming direct, if it's coming cold, probably a scam. And I think, you know, this should be obvious, but it sadly isn't. And it's easy to get fooled. It's very easy to get fooled if you're desperate. Like, if a entity, whether they present themselves as a VC or an accelerator or something in between, if they ask you for money, like, that's a scam, 100%. And I've came across a few that have really, developed their game. It's super sophisticated. People fall for it, and periodically they will come and go through LinkedIn and go through startup kind of founder groups, and they will look for victims. And there's a lot of desperate founders out there that need to meet the next paycheck, and they think, okay, if I give 10 grand to these guys, maybe I'll open up $1 million, $2 million, $3 million. Fuck that. That's outright scam. Just doesn't work like that.
Michael, do you have more time? Or, okay, please ask.
This is a question for Srdjan. Since you've been so lucky with finding angels, where did you find your angels?
They kind of find us. There's no rule. Some of them came from professional life. Some of them came through other angels. We reintroduced like a second. I think that the best advice would be just to be out there, talk to people, tell them that you're raising, talk about your business. Maybe someone in 3, 6, 5 months will remember something when they come across someone that is looking for opportunities in that space. So really, there's no rule. The only rule that I could kind of derive is like just talk to everybody, tell them you're raising.
That's it. A big round of applause, everyone, please, for our guests.